Welcome to another exciting edition of Market Takes. We are looking forward out at the week. Thank you so much for being with us. I know you could have been anywhere in the world, but you are here with me, and I appreciate that. I'm Dion Rabowen, reporter at the Wall Street Journal, your host for Market Takes. And look, there is going to be a lot happening this week. We got a huge week of data, but I'm going to tell you what the three most important things are that are happening this week. First things first, the first one is inflation. We get two big reports on inflation this week, CPI and PPI. I'll tell you what those are, what you need to look for in those. Second, we will be hearing from the IMF, the International Monetary Fund, and the World Bank on the state of the global economy. I'll tell you what to watch and listen for throughout the week of meetings, as well as what reports are going to be coming from that. Third, we will get the first earnings reports from the largest U.S. banks. That's coming on Friday. That's going to tell us a lot about not just the economy and the market, but that's going to tell us a lot about this bank run, these bank collapses that we've been seeing, this movement of money across the banking system. We are going to hear from those big banks, and we are going to learn a lot about what's going on with the banks and how that looks through the eyes of those banks and what that could tell us. That's going to tell us a lot about the economy. So listen, let's get into it. First things first, inflation out this week. We get the CPI, the Consumer Price Index. I want to put this chart here up on your screen. It shows you what we've seen from CPI. Now, going back to March 2022, where we start this, you saw inflation had already picked up, and there was an expectation that, okay, we'd hit peak inflation. But then, nope, you see it picks back up there, and then in June, we hit that 9.1% number, and ever since then, we've been coming down. And economists predict that inflation for March 2023 will be about 5.2%. Now that's down from 6% in February and down from 6.4% in January. You see that just continual decline of inflation on the CPI. And that just illustrates, this chart up here shows you how inflation has consistently come down over the past year. It's done that month over month as well. Economists predict that we'll see 0.3% inflation for March. That's after 0.4% in February and 0.5% in January. Now, one thing you want to watch out for when we get this CPI report is the core CPI number. That strips out volatile food and energy prices, and that's going to be a big number because economists actually expect that to rise. Now, overall inflation, you saw on that chart, had been coming back down, and economists expect that to continue, but core, stripping out volatile food and energy prices, is expected to rise for the first time since September. That could be big because it could alter what the Federal Reserve is thinking and how they're looking at inflation. You're going to want to watch out for that. Also important within this CPI report is going to be the movement of gas prices. We have seen gas prices, the average across the country has risen to about $3.60 per gallon, and out in California, it's approaching that $5 per gallon average throughout the state. So oil prices start to pick back up. The decline in oil prices has been a big part of why inflation has declined. It's been a big part of why consumer sentiment has been rebounding. And now we're starting to see those gas prices pick up. We're seeing oil on the market at about $80 per barrel. Saudi Arabia and OPEC announced a surprise cut in production. That could push gas prices up. You're going to want to watch that. Now, the other thing you're going to want to watch out for this week, CPI comes out on Wednesday. Thursday, we get PPI, or the Producer Price Index. Want to throw that chart up here on your screen to give you a look. Now, PPI has really led CPI. It's been about a month ahead, and we've seen the trends. Now, you see there that same kind of trend, but you see things moving higher. On the PPI report, June was over 10%, around 11% PPI inflation. That's what businesses are paying, producers. It's AKA what this report is also known as the wholesale price report. So it's what businesses are paying for labor, their inputs, all those things when they go out and buy, and then they turn around, mark the prices up, and sell them to us. So that's been a leading indicator of what overall inflation will be for consumers. That's expected to decline to 4.4% in March. So again, as it led CPI going up, it's now expected to lead. It has led CPI coming down. That's expected to continue. So this chart just illustrates what we've seen for business prices, the PPI, over the last year, and that trend is expected to continue. One thing that I think has been really interesting is, while inflation is still very high compared to historical norms, or at least the norms over the past 20 years, it seems like a lot of folks aren't really talking about it. I want to put one more chart here up on your screen, and this is a chart of Google Trends. And this is just how many people are searching for this compared to how many people searched for it historically. You see that big pickup there in August. That's that giant spike you see. That's actually after the big peak in inflation that happened in June, and ever since then it's been just kind of consistently declining. Look, inflation is not over. Inflation is still very far from the Fed's 2% target. It was at 6% we saw in February. Even at 5.2%, if economists are correct, we are still a long ways from 2%. So that chart up there just illustrating kind of an interesting theme that I'm seeing, which is folks not really being worried, not looking up, not Googling inflation. That's definitely something to watch out for. Also, we are going to get the FOMC minutes, the minutes from the Fed's last policy meeting. Those are out on Wednesday as well, along with CPI. Definitely something to keep your eye on. We'll be right here Wednesday morning, 10 a.m. Eastern, doing market takes, breaking down that CPI, Consumer Price Index report on inflation. I hope you'll be with us as well. The second thing you need to be watching out for this week is the IMF and World Bank spring meetings. Those are going to kick off this week. We've got the World Economic Outlook released on Tuesday. That's the IMF's big picture look at what's going on with the globe and, of course, the economic trends. In their last update in January, they said they saw a, quote, turning point for global growth. They raised their expectations, improved the outlook. Now, overall global growth is expected to slow from 3.4% last year to 2.9% this year. We'll see if they revise that. Maybe there's an even rosier outlook. But the one thing that you worry about with a rosy outlook is that could show a pickup for inflation. Definitely something to keep your eye out on. Previously, the World Bank has warned of a, quote, lost decade for global growth, especially in emerging markets, talking about how things like the war in Ukraine, the COVID-19 pandemic, and of course, high inflation have impacted the overall theme of how the globe can grow. They're saying that, the potential growth from 2000 to 2010 had been about 3.5%. Then from 2011 to 2021, that had dropped to 2.6%. Now the expectation is that that potential growth output will shrink to 2.2%. When there's not as much growth, businesses can't grow as much, incomes can't grow as much, folks aren't able to build their wealth as much, and you see things just kind of get worse for everybody. We had seen a long-running trend of continual poverty alleviation, wealth accumulation. Poor countries had been growing a lot richer, and that's a bonus for everyone around the world, including us here in wealthy countries like the US, Europe, Japan, things like that. That's been slowing down, and that's definitely something to watch out for, big picture when you look around the globe. Also, worries about inflation potentially coming back, definitely something to keep your eye out on for these IMF and World Bank meetings coming up this week. That kicks off on Tuesday with the WEO report, as they call it, World Economic Outlook. And then Wednesday, you got the big meeting, IMF Managing Director Kristalina Georgieva, World Bank President David Malpass. Look out for that. Finally, the third thing that you need to be watching out for, bank earnings. We get those starting on Friday, the big names, JP Morgan Chase, Wells Fargo, Citi, BlackRock, PNC Bank, BNY Mellon, the trillion-dollar teams. They are all going to be out with their reports this week. Not all of them have $1 trillion in assets, just a couple of them, just so I don't get any emails because I know y'all like to talk. But those big banks will be out with their earnings reports on Friday. This is going to tell us a lot about this worrisome banking crisis, banking collapse, bank run, whatever you want to call it. How much of that money flowed into these big banks from some of the regional and smaller banks? We hopefully will get some information on that. And what does this tell us about the state of the banking sector? Are these banks doing something useful with that capital? Are they saying, okay, we're moving into more risky assets? That might be something worrisome to watch out for. And this is overall going to tell us how are they feeling about this deposits. Remember, I told you guys a while back, banks don't want your money. The big banks, they have enough money. They really don't even know what to do with this money. Crazy problem to have, but it is one that the big banks are having. They got too much money. Now they got even more. What are they doing with it? We're also going to talk about how much they accessed, how much the big banks accessed the Fed's discount window. Did they borrow a lot of money from the Fed? We've seen $400 billion in increase in the Fed's balance sheet. How much of that went to big banks? Finally, we are going to see their loan loss provisions. How much are the big banks worried about losing money on loans? Are they putting a lot of money to the side and saying, okay, we think a lot of people aren't going to be able to pay back their loans? That's something to look out for. Hey, listen, that's going to do it for us here on Market Takes. I appreciate you guys so much for being with us. I am Dion Rabowen, reporter at the Wall Street Journal. I know you could have been anywhere in the world, but you're here with me. I thank you for that. We hope you'll be with us on Wednesday when we do it again next time on Market Takes.